Hey everyone, welcome to Economics. How are you all doing? I hope you all are doing good. Today I brought for you all February March 2026 9708 Weekend 32. We'll be solving paper 3 today. MCQs. Let's see what this paper has brought for us today. Moving forward, MCQ number 1. MCQ number 1 asks us what is the correct formula for calculating average fixed cost. So now we know in order to calculate average fixed cost is total fixed cost divided by output or the quantity produced. So it's either output or the quantity produced in the denominator. Pretty simple. Looking in that, let's look at the option. A says quantity produced upon total fixed cost. That's incorrect. B says average total cost upon total fixed cost. Again, that's incorrect. C says total fixed cost upon average total cost. That's incorrect. The denominator is incorrect. D is the correct answer, which says total fixed cost divided by the quantity produced or the output. So for 1, we'll shade in D as the correct answer. Moving forward, MCQ number 2. MCQ number 2 says, which statement about an indifference curve is correct? So now what is an indifference curve? Indifference curve is a curve that shows combination of two goods that give consumers equal amount of satisfaction. So this is what an indifference curve looks like, right? It's downward sloping, and over here you can write good Y. Over here you can write good X, right? And these are the different combinations on the same indifference curve that yield you the same amount of satisfaction. That means the consumer is indifferent if he switches between these combinations of good Y and good X. That means that they yield him the same amount of utility. Now what they are saying? They're saying which statement about an indifference curve is correct. It always has a positive gradient. No, it has a negative gradient because it is downward sloping. That's incorrect. B says it can intersect with other indifference curve. No, it can never intersect. Because if you look at the indifference map, it's something like that, right? So they don't interconnect. They don't meet. So B is not an answer. C says its gradient is determined by the marginal rate of substitution. Yes, that's the correct answer because what does its slope shows? Its slope shows how much the consumer is willing to give up one good for another. So the rate at which he substitutes, that's called the marginal rate of substitution. So for 2, we'll shade in C as a correct answer. It cannot be D because D says the higher the indifference curve, the lower the utility gain. That's incorrect. The higher the indifference curve, the higher would be the utility gain. That is why it is incorrect. So for 2, we'll shade in C as the correct answer. Moving forward, now this displays the revenue and the cost curves for a monopoly firm. They're asking at which price will the firm sell if it follows a policy of revenue maximization. Now, we all know a monopoly firm looks for profit maximization, and they're saying which price would yield the monopoly the maximum amount of revenue. So we know that revenue would be maximum at a point where MR, the marginal revenue, is 0. And where would that be? Where it meets the x-axis, right? So where does it meet the x-axis? It meets the x-axis over here. So looking at that, we'll move upwards on the average revenue and we'll see where does that point leads to. That point leads to over here. This means that it's at price B that we'll get the maximum revenue. So for 3, we'll shade in B as an answer. Moving forward, MCQ number 4. MCQ number 4 says an oligopolist with a king demand curve decides to raise its price. So now what happens? We are talking about a king demand curve. So what is a king demand curve? A king demand curve is a traditional model of a firm's behavior in oligopoly, right? So this would look something like this. It is elastic initially and then it turns out to be inelastic. That is why it's called kinked, right? It's a little broken, right? Now, over here it's price and over here it's quantity. And this is Q and this is P. Now they're saying, why might it do this? it decides to raise its price. Now you see what happens that in the king demand curve, firms believe that if they increase prices, so the rivals will not follow. And if they decrease prices, they will decrease it will decrease the market share. So they are always reluctant to bring about any changes in price. But now what will happen? So that is why we say in an oligopoly, prices are usually rigid, right? Prices are usually sticky. So now what happens? Why do you think it would raise its price then? It is starting a predatory policy, pricing policy. It's trying to price discriminate. It wants to start a price war. It's always reluctant. The prices are always sticky. So it's neither B, it's neither C, it's neither D. There must have been something increase in its cost. That is why it's trying to recover that. That is why it's got no option left. So for 4, we'll shade in A as the correct answer. Number 5. What is it called when a consumer's marginal utility is greater than the price paid for the good? That means that the consumer is willing to pay more than the market price. So if the consumer is willing to pay more than the market price, let's say this is the market price, P1, this is the quantity. So if he's willing to pay, let's say P2, so what is this area called? Consumer surplus. Because he's willing to pay more than the price, right? So for 5, it's C. All right. Number 6. The diagram shows the private and the social cost and benefits of producing a goods. Now they're saying which quantity is most likely to be produced by a firm operating under free market conditions. Now it's a free market condition. They display private cost, social cost, and benefit. Now they would say what quantity would a firm produce? We know that a firm would always be seeking a position where MPC, the marginal private cost, is equal to the marginal private benefit, right? So where is that? Where the marginal private benefit intersects with the marginal private cost. And let's look for that position. So where is it intersecting? It's intersecting over here. Point B. So for 6, we'll shade in B as the correct answer. Moving forward, MCQ number 7. MCQ number 7 says which combination of factors would make it difficult for a cartel to fix the market price of its product. Now, what is a cartel? Cartel is a group of individual firms in the same industry who agree to work together rather than compete. So now if they want to fix the market price, what would make it difficult for them? What would make it difficult? The barriers to entry should be high or low. If the barriers to entry are high, it would make it easy. So this means the barriers to entry must have been low. So we'll chop A and C because they all talk about A. What about the proportion of firms in the industry that are members of the cartel? So if there are members are more, it would be easy. That means the members are less, so the strength would be weak. So there are less members and low barriers to entry, which would cause them a weak position in order to fix the price. So for 7, we'll shade in D as the correct answer. Moving forward, MCQ number 8. A cafe employed 5 staff and paid them all $10 each. So that means what was the cost? 5 into 10 was $1.50 was the cost that was initially the cafe paying. When extra staff were needed, the employer had to increase the hourly rate to $12 per an hour for all the staff. What was the marginal cost each hour of employing 2 extra staff? So now if the employer employs 2 more staff, that means total 7 employees. And now he's paying what? 12. So on total he's paying how much? He's paying 84. So how much extra is he paying? 84. You subtract 50 from it, he's paying $34 more. So $34 per hour is the extra cost or the marginal cost each hour of employing 2 extra staff. So for 8, we'll change C as the correct answer. Moving forward, the government of a country allows each factory in the fertilizer industry to discharge 10,000 liters of liquid waste into rivers. So now the government is allowing the firms to dispose of 10,000 of liter as wastage into a river. If a factory discharges less than 10,000 liters, it can sell its allowance to another factory that wants to discharge more than 10,000 liters. So if you got less wastage this month, you can give your permit to another factory who has more disposal of waste. So, what does this illustrate? A pollution embargo, a pollution permit, a pollution tariff, a pollution subsidy. That's not a subsidy, that's not a tax, it's not a tariff, that's not an embargo. Embargo means a ban, it's a pollution permit that's being allowed by permission granted by the government. So, for 9, we'll choose in B as the correct answer. Moving forward, MCQ number 10. What is not an example of a government failure in the provision of healthcare? So, that means there's something which the government has not failed as far as healthcare is concerned. Equal access to healthcare, that's a positive sign. Insufficient spending on vaccinations, that's a failure. Long waiting time to see doctor, that's again a failure. Storing excess supplies of unused medicine, that means you had stocks and you did not use that medicine, you let it expire. That's again a failure. So B is a failure, C is a failure, D is a failure. But here they are asking what is not an example of a failure. So that means equal access to healthcare is something positive. That's not a failure. So for 10, we'll shade in A as a correct answer. Moving forward, MCQ number 11. MCQ number 11 says the diagram shows the equilibrium initial in the labor market, which is D1, and S1 is the initial supply curve. So S1 is the initial supply curve, D1 is the initial demand curve. So this is the equilibrium position where W was the wage rate and Q was the quantity of labor. Now they are saying what? They are saying which changes in the market will cause the largest increase in economic rent. So now they are saying what should happen to the supply curve and the demand curve if you want the economic rent to be maximum, right? So now, what is economic rent? First, you tell me. Economic rent is a payment to a factor of production above its transfer earnings, right? So, and which area would economic rent be? It's an area that is above the supply curve. So, it has to be an area which is above the supply curve and below the wage rate. So, it has to be below the wage rate and above the supply curve. Now, they're saying you want to maximize that. So, this means that you should go to a region where it should be a rightward shift towards the demand curve, right? And what about the supply curve? If you want to maximize the region because it's what? An area above the supply curve, right? To be the largest. So if you want the area above the supply curve to be the largest, you should move towards the supply curve shift, right? So to the leftward shift. So let's move towards S2 and the demand curve should be towards D3. So let's see if we've got an option like that. So yes, it's shift to D3 and a shift to S2. So for 11, we'll put in C as our correct answer. Moving forward. 5 years ago, the Gini coefficient of a country was 0.35, but now it's 0.40. Which combination of policies is most likely to have been used in the 5 years? So now this coefficient is basically shows you what? It shows you income inequality. What does it shows you? It shows you income inequality. So this means it ranges from where? It ranges from 0 to 1. 0 shows what? 0 shows perfect equality. 0 shows perfect equality. And 1 shows what? Perfect inequality. That means one person controls all the wealth. So this shows perfect inequality and this shows perfect equality. Now, if it has worsened from 0.35 to 0.40, that means the situation has worsened. Now, let's look at the table. We've talked about corporate taxes, sales taxes, and means tested benefits in real terms. So, in real terms, the benefits must have fallen. The benefits must have decreased. So, it cannot be increased. So, we can chop A and D at the very moment. Now, so it has to be a decrease or a decrease. What about sales taxes? Sales taxes means the burden has to be paid by everybody, right? So, the person who earns low income because they are regressive in nature, right? So that over that person, the burden falls most. So for sales tax, it should be what? It should increase, right? That is why the situation must have worsened. So it has to increase. Again, both B and D show that. What about corporate taxes? Corporate taxes must have decreased. That is why the situation was. It had the corporate taxes or the profit charge taxed on the company's profits. increased, then the coefficient must have improved. But over here, the coefficient, what happened? Deteriorated, right? Worsened. That means you charge less profit, you charge less tax out of profit of the firms. So you chose decrease, so it has to be B. So 12 will shade in B as the correct answer. Moving forward, MCQ number 13. MCQ number 13 says there was a national minimum wage of WM introduced. So this was the minimum wage in an occupation where workers are employed by profit maximizing monopolists. Monopolist is a single employer in the market for labor, and they are asking what happens to wages after the minimum wages has been established. So now first we'll see initially what was the situation. Initially the situation was we were at OW1, OW1 X Q1, right? We were here. After the minimum wage, what happened to the revenue position? We moved towards OWM Y Q1, YQ3, OWM UQ3, not Y, OWM UQ3. We increase from OW1 XQ1, OW1 XQ1 to OWM UQ3, because after the minimum wage was imposed, the quantity rose as well as the wage rate. So D is the correct answer. Moving forward. 14. Investment in education and training is likely to reduce which type of unemployment. So when you are investing in training, when you are investing in skills, you are improving the skill set of the employee. So that means you are targeting structural unemployment when employees were redundant because they had a skill set that was no longer demanded. That is why they were redundant. The technology was obsolete. The skills were no longer required. So for 14, we'll shade in C as the correct answer. Moving forward, MCQ number 15. An estimate of the consumption function of an economy is given by this equation. The C is the consumption and Y is the income. Now, they are asking which conclusion can be drawn from this information. So now, we know that over here, point 0.8 is what? Is the gradient. So MPC is equals to the gradient, right, which is equals to 0.8. And average propensity to consume is equal to consumption upon the output, right, which means it is equals to 10,000 plus zero point 0.8 upon Y, right? So this would be 10,000 plus 10,000 upon Y plus zero point 0.8. So now notice what happened, that since 10,000 upon Y is always positive, since 10,000 upon Y is always positive, APC has to be greater than MPC. The average propensity to consume has to be greater than marginal propensity to consume, right? Average propensity to consume is greater than marginal propensity to consume. As average propensity to consume falls, as income increases. Average propensity to consume falls as income increases. So it cannot be A, it cannot be B, it cannot be C. Because over here it says average propensity to consume is constant. Average propensity to consume increases as income increases. No, average propensity to consume falls as income increases. Average propensity to consume is always equal. No, average propensity to consume is greater than marginal propensity to consume. So we'll chop A, B, and C. D is the correct answer. 15, we'll shade in D as the correct answer. Moving forward, MCQ number 16. 16 says investment is involved in both the accelerator and the multiplier. What is the nature of the investment in each case? So now we know accelerator is induced because it is caused by increase in demand, so it cannot be autonomous. You can swap A and B. What about the multiplier? The multiplier is autonomous. So it has to be induced in the first case and autonomous in the second. Therefore, it's C as the correct answer. Moving forward, a country's velocity of circulation of money is constant. If the money supply increases by 4% and real output growth by 3%, what will be the approximate change in the price level? So we know that the change in the money velocity is equals to this. So the change plus the change in velocity should be equal to the change in the price plus the change in output. So 4 plus, we don't know this, that's 0. Is equals to this. So you subtract it, it has to be 1. So for 17, we'll shade in A as the correct answer. Moving forward, MCQ number 18. And MCQ number 18 says there are different measures of the money supply from narrow money to broad money. So narrow money is what? M naught. And broad money is what? M4. Now, M naught is what? Narrow money to broad money. Narrow money is money which is available to be spent immediately. And broad money is narrow money plus the bank deposit, right? Now, why do they exist? They exist because different assets perform different functions, right, for different segments. So, because of the need to reflect the different functions that money performs, we've got assets ranging from M0 to M4, coins, bank accounts, right? So, for 18, we'll shade in D as the correct answer. Moving forward, MCQ number 19. The diagram shows quarterly changes in Japan's GDP over several years. Now notice if we displayed the years on the horizontal axis and the growth in percentage on the vertical axis, they're saying how many recessions occurred. Now what is recession? Recession is when there is negative economic growth, for 2 consecutive quarters. For 2 consecutive quarters, there is negative economic growth, that's recession. So now notice, it's over here, it's over here, it's over here. So it's 3 times the recession is occurring. So for 19, we should see as the correct answer. Moving forward, MCQ number 20. 20 says what is shown by a short run Phillips curve. Now, first you tell me, a short run Phillips curve is what? It's a curve that shows that as inflation increases, the short run Phillips curve shows a negative relationship. It shows that as inflation increases, unemployment increases, right? So it's got a negative sloping graph. It has got a negative sloping graph. So for 20, it shows a negative relationship between inflation rate and unemployment. By definition, we call that. 21. 21 says, what is the reason for a central bank to decrease the interest rate? Now, why do you think the interest rate is decreased by a central bank? To attract hot money inflows to prevent a decrease in the exchange rate. If you decrease the interest rate, so hot money doesn't flow, hot money goes away. It cannot be A. B says to discourage private sector borrowing for investment. If interest rate decreases, so private sector borrowing increases and not decreases. D says to slow the rate of increase of domestic prices. So if interest rate decreases, inflation automatically reduces. So the prices automatically reduce, right? Prices increase. Inflation increases when interest rate falls. So it's incorrect. Because when interest rate falls, what happens? People will borrow more. They would invest more. Demand will increase, right? Inflation will rise. So it's C. But why C again? To increase aggregate demand and aggregate supply in the economy. Yes, that's right. Because we decrease interest rate to boost aggregate demand and to boost aggregate supply, because you want to stimulate demand, you want to increase the productive capacity, you want firms to expand their output level. So 21 will shade in C as the correct answer. Moving forward, MCQ number 22. MCQ number 22 says a currency is devalued. So you reduce the exchange rate over time period, and what type of economy is there likely to be the greatest improvement in national income. So if you devalue, the country must have been, the economy must have been an open economy. That means it participates in international trade. It cannot be closed. Otherwise, there's no point in devaluing your currency. So it cannot be closed. So you can show up A, you can show up C. What about the time period? What is the likely time period that would require it to have the greatest improvement? The greatest improvement, it will take certain time, because when you devalue it, it takes time for things to improve. It has to be the long run. 22 will shouldn't be as the correct answer. Moving forward in sequence number 23. 23 says how might an increase in the surplus in the current account of BOP affect other macroeconomic objectives in the short run. So now if you've got a positive scenario of your current account and your BOP is showing a surplus, how does it affect the other macroeconomic aims in the short run? It decreases economic growth? No. It decreases employment? It increases sustainable development? It increases the rate of inflation. It should improve economic growth. It should increase employment level. Sustainable development would happen in the long term. Over here, they're talking about the short run. So in the short run, it would increase inflation rate, right? It would increase inflation rate, because when exports are going to rise and imports are going to fall, current account is in a positive scenario. In the short run, it would increase inflation rate. So for 23, we'll shade in D as our correct answer. Moving forward, MCQ number 24. MCQ number 24 shows us an economy in the short run with an equity to price level P2 and output level Y2. So this is the output level and this is the price short run equilibrium. Now, what happens? Which combination is most likely to be achieved in the economy at the equilibrium point E2? Now they're saying what is going to happen. Now, if you look at it beyond long run aggregate supply curve, there's an output gap, right? So it cannot be A, because gap means imports, and so the competitiveness would fall over here, because it says international competitiveness, but it's reducing the current account deficits. It cannot be A. Similarly, it cannot be B, because in B it says reduced rate of inflation and reduced exchange rate. So inflation is increasing and not falling. So it cannot be B. C is the correct answer, because it would be talking about increased level of employment and increased per capita income. That's the correct answer. So for 24, we'll shade in C as our correct answer. Moving forward. Number 25. What is likely to be found in a free trade area? Now, a free trade area is where that's an agreement between members, countries, and where tariffs, free trade occurs, right? So there's a free trade agreement between countries. So for exports and imports, and what happens? So they impose tariffs on goods entering a member country from a country outside the free trade area. Yes, that's correct, because they would impose tariffs if in a member country the goods enter from a country outside. But otherwise, if it's from a member to a member country, notice you will not impose any tariff or quotas or things like that, because that's free trade, right? So it has to be A. 25 will shade in A. 26. What is not included in HDI? In HDI, we talk about GNI, we talk about life expectancy, we talk about mean years of schooling. So these are all included. But here they say what is not included. So infant mortality is not included. That is why we'll shade in A. Moving forward, 27. A multilateral organization that provides loans and grants to governments of low and middle income countries for the purpose of pursuing capital projects. Which organization does this statement describe? Now they're saying it's an institute, it's an organization that provides loans and grants to low and middle income countries in order to pursue capital projects. So, what is it? Is it IMF? Is it the US Central Bank? Is it the World Bank? Is it the World Trade Organization? It's not a World Trade Organization because that's for trade. It's not the central bank because that's the Fed, US. That's incorrect. It has to be the World Bank. So the World Bank finances development and infrastructure projects, development and infrastructure projects in low and middle income countries. So it's the World Bank. So for 27, we'll shade in C as the correct answer. Moving forward, MCQ number 28. 28 says a country's national income in money terms increased by 3%, prices increased by 4%, population increased by 1%. What was the approximate change in the real income? So money terms, it increased 3%, prices increased 4%. So 3% money terms increased, but the prices increased by 4%. So in real terms, it fell by 1%, right? But what happened to the population? The population increased by 1%. Again, you subtract 1% from it. So total overall, there was a decrease of 2%. So for 28, we'll shade in B as the correct answer. Moving forward, 29. 29 displays the curve that talks about the level of environmental degradation and it talks about the possible outcome for an economy. The horizontal axis displays the per capita income. They are saying what is the most likely reason why the economy is unable to turn at point X towards point Y. So why would economy is not able to turn at point X towards point Y? Why is it not able to do that? It's not able to do that. It's why unable to decrease the degradation level because of the concept of pollution, right? So it has to do something with pollution. It doesn't have to do anything with taxes or depreciation. So pollution continues to be caused by rising real GDP. That's the answer. So for 29, we'll shade in C as the correct answer. Moving forward, MCQ number 30, that's the last MCQ. What is not a possible effect of using expenditure switching policies to reduce a deficit on the current account of the BOP? So now why do you think the government is trying to reduce the deficit in the current account on the BOP? But what would not be a possible effect of doing this? Alright, so B says a retaliation from other countries. It cannot be B because it can invite retaliation. C says an increase in demand pull and cost push inflation. It cannot be C because it can increase inflation as the economy expands. Similarly, it cannot be D because the revenue is going to increase if the tariffs are going to be imposed by the government, right? So it cannot be B, it cannot be C, it cannot be. It has to be A because a reduction in the demand, domestic demand for locally made goods and services. So this is your answer. And it's A where it cannot cause a reduction in demand for locally manufactured goods because it would increase in reality, right? So, so 30 will shade in A as a correct answer. I hope you understood and enjoyed solving this paper with me. Stay tuned, subscribe, happy learning.